All right. Well, thank you for joining us for another great edition of Moving Beyond the Coronavirus Economy. My name is Tom DuFore. I'm the CEO of Big Sky Franchise Team, and this is one of my favorite sessions we do each month. We've been doing it for I believe over a year now. We've been doing this session or longer once a month where we talk about what is happening in the wide world of macroeconomic data and some specific microeconomic data as it would pertain as we or I drill down some of that macro data and apply that specifically to franchise sales and marketing trends and how you can use this to apply to what you have going on. So we like to zero out, get a wide look at what's happening on the franchise, on the macroeconomic data information, because that's going to impact all of the little nuances and things that are going on a micro level. So we're going to start. I'll share my screen and we'll zoom out. And by the way, if you're new here, first time here, I go rapid fire. So I try to jump from source to source, data point, data point, data point, and we try to reflect quickly back on how this might impact what you're doing, or at least be thinking about for your own franchise development or marketing and lead generation efforts that you're currently going through. So I am going to share my screen and we will get this show underway. By the way, we tend to have smaller groups here. So if you're online live with us right now, feel free, if you have a question regarding something, raise your hand or ask to unmute, and we can go ahead and do that for you here. So I am going to go ahead and share my screen and we will get this show going. So my first place that I always like to start with is the Purchasing Managers Index report that's produced by the Institute for Supply Management, and they generate this report each month. So this is reporting for the month of January. And what it shows here is that manufacturing, this is for the manufacturing sector. And the reason I look at manufacturing is because manufacturing has the greatest impact or ripple effect on economy. So when manufacturing is growing, it has the greatest ripple effect to impact more businesses, more people, and impact the economy as a whole. So manufacturing, the Purchasing Managers Index was at 57.6%. Now, anything over 50% is a good, solid number that we're looking for. So it's at 57.6%. And I'll read the quick description here. It says manufacturing grew in January as the manufacturing PMI registered 57.6%, 1.2 percentage points lower than the seasonally adjusted December reading of 58.8%. The manufacturing PMI continued to indicate strong sector expansion and U.S. economic growth in January. All five sub-indexes that directly factor into the manufacturing PMI were in growth territory. So things for you to think about here, why this is important, and just an important note, manufacturing's growing. It tends to be a leading indicator, which means that things are going to should, in theory, continue to trend in a positive direction. So we see that it's still positive. If we look back here in early 2021, about a year ago, and we had a huge surge in, those were record-setting months for the PMI. So just know that these were all-time highs, if I remember correctly. So the fact that we're still seeing very high percentage is a good thing. So as you're talking to prospects, candidates, people who maybe are still a little worried about what's going to happen with the economy, this is a good thing to talk about and share some of this data and information with them. All right, let's jump into report number 2 from the Institute for Supply Management. This is the Purchasing Managers Index report for the services sector. Now, the services sector is the largest percentage of our economy here in the United States, and it's showing that we had a 59.9%, which means that we are in a positive mode from that. Excuse me. So in January, the services PMI registered 59.9%, a 2.4 percentage decrease compared to the seasonally adjusted December reading of 62.3%. 12-month average is 62.6%, which reflects strong and sustained demand for the services sector. The January reading indicates the services sector grew for the 20th consecutive month after 2 months of contraction and 122 months of growth before that. And a reading above 50% indicates the services economy is generally expanding, and 50% indicates that it's generally contracting. So again, just another data point to indicate here that things are moving in a positive direction for services. And you can actually kind of see that trend line just visually. You can kind of see, I'm using my cursor to kind of show since even the bounce back from the economy here in mid 2020, after the lockdowns and things started to open up again. We see here this trend line continues to kind of keep trending upward. So that's positive. And here's the next line, which is the hospital index. And that's showing growth again at 64.1%. And this is their newest report that the Institute for Supply Management uses. But it's a really interesting data point just to show what's happening in hospitals as healthcare continues to be such a large percentage of the overall U.S. and economy here. So the point is that when you're talking to people who are saying, maybe I'm worried or I'm nervous about the economy or what's going to happen, I'm not quite certain. Generally speaking, when you look at these indexes here, purchasing managers, these are forward thinking. They're thinking, okay, what do I think my demand is going to be in the future, in the next 6 months, the next 3 months, quarter, 2 quarters, the next year? They're planning ahead for these purchasing managers. So as you look at each of these for manufacturing, for services, and for hospital, you can see they're all thinking positive, which in general is a good indicator. These folks they're responsible for making wise purchasing decisions. So I think these are really positive signs, which we've been talking about for many months now. Is that to be the case? Let's talk about inflation. So one of the things that we talk about and have been talking about is inflation. This is a report from Statista. It says inflation hits 40-year high, diverges from long-term goal. And what I really like here, it says consumer prices in the United States continue to surge at the start of 2022 as inflation hit a 40-year high in January. The CPI for all urban consumers was up 7.5% compared to a year ago, while the core index, excluding volatile food and energy prices, increased 6%. Okay, so this came out, by the way, in February 14th, so about a week and a half ago. And it's interesting to see they go back to January of 2019 to show what was happening. The actual is this green bar that it's showing, and it shows how it was trending pretty consistently around 2%. And then it dropped when all the pandemic hit, and then it slowly started rising. And now in January of 2021, February, first quarter 2021, it starts to rise, and it really is taking off. So what does this mean for you and your folks in your business? Well, if franchisees are concerned about it, the reality is your franchise fee is probably not going up at that rate. So you can tell your franchise candidates, by the way, even though inflation's going up, our franchise fee is not. Number one. And number two, to create a sense of urgency or a greater sense of urgency with your franchise candidates is to let them know every moment you delay, things are getting more expensive. So your dollar today is worth more than your dollar tomorrow. So you need to, if you're going to do this, you need to do this now so that your the value of your current cash that you have is worth more. So you need to do that because the cost of these goods continue to go up. And anyone that's in any sort of business that relies on raw goods or even building materials. So if your franchisees have build out or need to purchase any sort of fixtures or equipment, tools, anything. These things are all delayed. Supplies are low. And so it not only is the inflation high, and so it's continuing to devalue the dollar, but it's also going to take longer for them to get things. And I'm certain you're talking about that, but these are actual numbers for you to share with them to say, even if you look at this red line, which is a 3-year average, you can see here here's a 3-year average, pretty steady, around that 2% number. And here it goes. First quarter, start of second quarter of 2022, on up it goes. So just something for you to be thinking about and sharing with your candidates as they're coming through it. In addition, something to talk about with your franchisees about any current franchisees in the system. You very well may need to be adjusting pricing. You probably already have, but price adjustment, which only then contributes to greater inflation. But for those end goods and services you're delivering, your franchisee's cost of doing business is going up. And so usually your price increases tend to be lag behind what's actually happening for the current trend. So try to stay on top of that. Maybe be reviewing that even quarterly with what's going on and giving your franchisees some recommendations. Other timely discussion here to talk about would be the current situation with Russia and Ukraine. I'm not. I would not consider myself to be a world news person to keep in the loop of what's going on, and it's hard to conceptualize all of the devastation that's going on when we're here and not faced with that directly. But this ties into inflation. So there's been a lot of talk about the increase in barrel of oil and an increase in natural gas. Russia's a big exporter of oil and natural gas, especially to Europe and neighboring countries. But the real impact is going to be in wheat. So Russia and Ukraine are both in the top 5 exporters of wheat globally. So you can see here, Russia's the #1 exporter of wheat, then the USA, then Canada, then France, and then Ukraine. So the top 2 of the top 5 exporters of wheat globally are currently in this. I don't know if it's a war or what it is. I don't know the terminology to use for it. But whatever's going on, it's going to impact it. And I have a very close friend who runs a national food manufacturing company, and he has shared with me that they have already seen an immediate spike in wheat pricing. And so you are going to see this. If you're in the food business, you are going to see this impacted pretty quickly here. So just be aware that this is coming and this is happening here. So just note that whatever the potential, political outcome or other things that might happen, I'm not abreast or really in tune with that. But when it comes to looking at how this is going to impact your prices, this is something for you to know about, because your franchisees or maybe your candidates might be worried about what's happening with the crisis. And fortunately, if you're in the United States, you're not going to have that day-to-day impact of the devastation of what an invasion or war looks like. But these ripples are going to impact us. And so being prepared to discuss that with the franchise candidates is a big deal. Okay, the next thing I want to jump into is retail and the U.S. Chamber of Commerce. Let me pull up this email. Here it is. Okay, so the U.S. Chamber of Commerce sent this email out on February 17th, so just a few days ago. And it talks about retail sales rose sharply in January. It sounds like unexpectedly. So it's interesting to see. Take a look at this retail sales in January here, this blue bar on the far right for you to take a look at here. You can see it's the highest number of retail sales on record since it looks like, let's see, January of 2021. Sorry, my computer froze there for a moment. The U.S. Census Bureau gave us a welcome bit of good news on retail sales front. reporting that sales jumped 3.8% in January. Why it matters? Most observers expected a much lower number because of the surge of the Omicron, but consumers spent despite the spike in cases. So I think that's interesting. So even though we saw this big spike in the new coronavirus variant thing, consumers seem to say, well, we're going to keep doing our thing. So I found that really interesting. Sales at online retailers surged 14.5% after an 11.4% drop in December. Sales were up at motor vehicle sales and dealer parts. Sales were down at health and personal care stores. Down just a little bit, it looks like. Gas, sporting goods, looks like those were down a little bit. So anyway, it's let's see, it says, be smart, don't pin the increase in sales on higher prices. Inflation was 0.6% in January, so sales rose strongly in real terms. So just some interesting data to share and talk about. And then this is what I have on my screen right now is the actual U.S. Census Bureau data from where the U.S. Chamber of Commerce received that. Okay, this is my favorite statistic since that I discovered from the, and again, this is actually produced from the U.S. Census Bureau as well. And this is the number of new business applications that are being applied for each month. So this top line here shows you, so you can see in January, it was just over 430,000 business applications nationally that were applied for. And business application is essentially anyone applying for an EIN nationally. They aggregate all the state data and combine it into one report here. And so I just think that this is incredible to see the sustained interest in new business activity. You know, a contrarian point of view to this might say something like, well, then maybe a lot of companies shut down from the pandemic and they filed bankruptcy, or they shut down and they're starting anew. And I would agree that there is probably some of that in there. We are fast approaching, though, 2 years from that moment. And so a lot of that fallout and restart up and so on probably has already happened, the majority of it, and probably a lot of it at this spike here where you see over 500, looks like about 550,000 business applications came through in August. I think that was August of 2020. And then you see this just sustained almost 50% increase over what it was pre-pandemic levels. To me, it's just incredible to see this happening. The yellow bar here just shows high propensity applications, which means that these are industries where the EIN numbers are very likely to create many jobs, to create employment of many people. So they try to identify that based on the NAICS code that they're filing under. But anyway, the point for you to take away from this is that the candidates you are talking to have business startup on the brain. Okay, so obviously now not all of these are looking to buy a franchise that they're coming in and starting, but it means that entrepreneurship, business ownership, being the captain of your own ship, that is on the mind of the buyers that you're talking to. So these folks are serious. And that's been a consistent trend just from a qualitative standpoint, just from what we've seen with the clients that we work with and the candidates that we speak to. We're seeing a far greater sense of urgency to either move forward or to move out of their interest. So we're getting to a yes or a no much more quickly than before the coronavirus situation hit. So make sure that you're reminding and talking about, and just that you have this in your mind, and that your marketing team and folks are thinking about these things. Okay, let's jump into some franchise data. Actually, I'll go to the small business report. That's actually where I want to start here. All right, so this is the small business startup sentiment index. This was published at the beginning of February. This is for January, and this is put together by Franchise Ventures. I love this report. It just gives they do it monthly. It's just a fantastic report to give you an update on what is the general maybe temperature or pulse of the startup entrepreneur, that person that's at that startup place. And so here's one question: is now a good time to start a business? And over on the far right, they combine the answers of agree and strongly agree. And it shows that 63.3% of the respondents agree or strongly agree that now is a good time to start a business. So that's positive to see those numbers up as high as they are. Let's scroll down. I want to show you this report here. Startup intent this month is trending up. So we see this at the bottom of this. There's this kind of fluorescent green color, and that's the people that are interested in starting a business this month right now. So in the month of January, 35.4% of respondents said that they intend to start a business right now, this month, this very moment. And then if you combine that with people that are thinking in the next 2 to 3 months plus this month, which is this blue color and green color, that's just over 50% of all respondents are looking to start a business, are intending to start a business in the next 3 months. Now, I've been in franchise sales and franchising and startups long enough to know that while they might say the next 3 months, it very often could be 6 months or 12 months, right? You could probably double these numbers for what the reality looks like. Nonetheless, it still makes the case to show that people are thinking about doing this right now. Okay, here is one of my favorite charts that they produce. The question is, which of these factors will have the biggest impact in the next 6 months on your decision to start a business? So while we might think it's maybe the economic or climate or the coronavirus or something like that, for the overwhelming majority, the number one factor to starting the business is access to funding or credit. And the black line on this bulk of lines here, this kind of multicolored rainbow of lines, you can see this black line on the far right. And that's for January of 2022. And it shows 73.6% of respondents are worried or concerned about funding. So why does that matter to you? That means 3 out of 4, or nearly 3 out of 4 prospects you're talking to are concerned about funding. So if you don't have third-party vendors or suppliers that are franchise lenders or franchise funding companies that you can refer franchise candidates to, that's probably an issue. And we have certainly several great franchise funding referral partners that have been around a long time that we refer our clients to. I'd be happy to share those with you if you're looking for some great funding source. There are a bunch of them out there. We like to, as a first choice, tend to recommend companies, funding organizations that specialize in franchising. And the reason is that they understand the franchisee franchisor dynamic and understand how to interwork and work through the franchise disclosure process and funding and sites, all the pieces that make franchising a unique business model. And so these suppliers understand that. And one of the reasons why we prefer working or recommending those groups and organizations versus maybe your local banker or someone you're working with that maybe doesn't specialize in it. The second most frequent concern is the current economic climate. So 34%. So that means 1 out of every 3 leads is just over that. 1 out of 3 leads is concerned about it. So having been prepared with the information, details and information like we have shared today will be helpful for you in your franchise expansion when you're talking to these candidates to maybe share some of these. A lot of times the candidates are not going to tell you that these are their concerns. So being able to share this information with them when you're talking to them is a really important and helpful thing for you to say. By the way, if I jump back to this chart here and talk about the purchasing managers index for manufacturing, or share the information to say inflation is continuing to go up. The good news is you can adjust your prices to accommodate that. Your pricing can go up certainly, But secondarily, the longer you delay, the less your dollar is able to purchase today. So just something for you to keep in mind there. And then the third largest category is just other. So about 20% is other. And then all of the other options are just small stock market changes, political changes, regulatory, tax law. Those are all at or around 10% of respondents have concern over those. Um, this is an interesting one. They ask is, how does COVID-19 affect your interest in business ownership? So it's hard to see. I'll see if I can zoom in. These lines are pretty thin here, but you can see this line on the far right. It's kind of this dark blue or black line. I can't tell exactly what the color is. But I find it interesting is that their one option is that the COVID-19 will have no impact. This is an issue that will be resolved before I start my business. 17% of people said that. The next one was, it boosts my interest in controlling my own destiny through business ownership. That's the second highest rating at 24.7%. The next one, which has spiked the last 2 months, by the way, look at this spike in December of 2021 and January of 2022, that this response has spiked here. It says, makes me favor businesses that would be resistant to this kind of thing. So if you're in a business model that has some sort of, whether it appears to, or it actually has is resistant to maybe pandemic type situations, or the COVID-19, 36.8% of people are saying I'm interested in something like that. And 15.4% said that it reduces the amount of capital that they have to invest. And 6% of people said that they've decided to put their business startup on hold because of that. So what's interesting is that about 20%, I would say, in looking at this, 20% of the responses were really orienting around either a decline in capital, or they're starting a business on hold. The other 80% looks like it relatively either unchanged, it increases their interest, or it just changes what they're interested in when you're thinking about that. So you can apply that certainly to your own business and how that looks. Let's see. This is just showing the percentage by demographic or generation. So Gen X and millennials drive business startups. Certainly they're at the prime age for that. So it shows here Gen X accounted for 50% of startup interest and responses. The millennials, or Generation Y, accounted for almost 35%. So that's about 85% between Gen X and millennials. And then you have Gen Z, which is just kind of getting in the mix there at 1.4%. And baby boomers are, really starting to shrink, which would make sense, as so many are at or approaching retirement age at 13.9%, almost 14% there. So that is the small business Startup Sentiment Index from Franchise Ventures. I thought that's a great report to share and showcase. Now we're going to talk about some specific reports that Franchise Insights produced. So one of the questions, it says, despite escalating lead costs, not all inquiries are responded to. Contact attempt rates linger under 60%. So this was conducted in January of 2022. FranchiseInsights.com did a mystery shopping survey. And what they found is that just under 60% of franchise companies or leads were reported as contacted by all of the franchises they inquired to. So this means that of the mystery shoppers, about 60% of them said all franchise sales people or organizations from the franchise company that I reached out to followed up with me. 16.9% said half, 8.5% said less than half, and almost 17% said none of them followed up. So that's pretty incredible to think that almost 20% of the mystery shoppers had zero responses back from franchise salespeople to follow up. And what does this story really tell you? It's that your competitors in franchising, and this, has been a something that's been relatively consistent in franchising for a while, but your franchise competitors out there in the franchise space, not all of them are following up with the leads. So we've learned from other past data that most candidates are inquiring about 1, 2, or 3 franchise brands. So out of those 1, 2, or 3 franchise brands most companies are responding to, only about 60% are responding to all of the leads that are coming in. So think about how that can apply to your business, and think about how really at the end of the day, your only competition is really you and your business being the right fit for that candidate. Let's see. I'm going to skip that one for right now. Best practices update. I thought this was great. This came out February 16th. And it is that franchise prospects are most likely to respond to email or text, but email is the safest for the initial contact. So candidates are saying, if you look at here, email is in green, text is in blue, voice is in this orange color. So first choice for contact by prospects is email, and text message are about even. Second choice is email and text, and third choice is voice. So what we tend to do at our company and recommend to our clients is you do all 3 of them, because you don't know who's going to do what. But if you choose one over the other, definitely do email, number 1, and do text, and then consider a phone call as your third choice, is really what that's telling you there. So that, lastly here, this is franchise data. So where are the most inquiries coming in? I believe this looks pretty similar to last month, but this is the last 90 days where the most active franchise categories. So the last 90 days, home services accounted for almost 21% of total franchise inquiries. Senior and healthcare was at 13.1%. Business services at 12.2%. Food and restaurant is really bouncing back here, 11.1%. Cleaning and maintenance at 10.3%. Fitness is bouncing back at 5.1%. Financial services, 5%. Child-related, 4.5%. Retail at 3.4%. And pet services at 3%. So as you think about this and take a look, which category does your business fall into? And you can see roughly what percentage of inquiries your industry is getting in terms of the overall market as a whole. So if you're in one of these top 4 or 5 categories, really these top 5 that each have 10% or more, you got 10, 20, 30, 40, 60, almost 65% here of all leads are coming through one of these top 5 categories. So if you're in one of those, you're getting likely to have plenty of leads coming in. If you're in other categories, lead flow may be a little bit less there. And so that is our update for today. And are there other questions for anyone who's decided to hang with me the whole time as we're tuning in? Questions or points of discussion for us to share together? All right. Well, I'm not seeing anything coming in here. So I would like to thank you all for tuning into this edition of Current Franchise Sales and Marketing Trends. Hopefully you picked up a nugget of information or two that could be applicable to your business and helping you make a better decision for the direction you're looking to grow and take your business. My name, again, is Tom DuFore. I'm with Big Sky Franchise Team. If you have not subscribed to our YouTube channel, you can make sure you subscribe at bigskyfranchiseteam.com or the Big Sky Franchise Team YouTube channel. We will post this so that you can watch this or save this as a video. We post it generally within a week after it goes live. And then if you have not already subscribed to our podcast, please check out Multiply Your Success. The podcast, again, is Multiply Your Success at any of your favorite podcast services. Thanks for tuning in. Have a great weekend, everyone. And March is just around the corner. We'll see you next month.